All right, here we go. Stocks by the numbers. Another quick update here. And I just wanted to take a quick look at STEM Inc., symbol STEM, listed here on the New York as per request. Stock sitting here at 72 cents, taking about an 8% hit today, down about 6 cents on the day. However, this is one of our trend lines that we drew out again from the bottom of December 26, 2024, coming up, touching the low there of January 23rd, 2025. And you can see that we recently had a big spike up to almost $1.70, and then we dropped all the way back down to this fib here of about 56 cents. However, we instantly spiked back up to that key level of about 91 cents and change, which I spoke about. That's where the gap down was. And you can see that it's been trying to hold that 20-day moving average, and we dropped today, but we're technically still above our support trend line. So in theory, we should kind of stay here like this and slowly retrace back into the 90-cent range. But of course, anything can happen. This seems like really the kind of longer time frame. I don't know how you want to put it, but I guess second level support, if you will. But this is going from the lows of December 20th, 2024, going up to the bottom of the body of where we started this trend line from, the bottom of the body of this candle here. And that's cutting up across there. So technically, if we do break, we could drop down here to this trend line, looking like about maybe 49.50 cents, which would meet up kind of with this trend line potentially as well, this purple one cutting across. But in my opinion, all eyes are on earnings with STEM, right? We had the management shakeup, we shook up the board a little bit, and that kind of reinvigorated the stock a little bit. Because now with this new team, if we can actually get sales in check and start to generate revenue and actually fulfill orders on that supposed growing $2 billion backlog that we kept speaking about, if this company can actually start delivering, then yes, we can potentially see a run back up to 2, 3, 4 and change. It is very possible. We were speaking about the long-term potential value that was on the table with something like STEM. But the problem is, if we go back and we look at earnings, we can see the company has been consistently disappointing shareholders basically since we started looking at the stock. That's basically how it happens sometimes, right? But in my opinion, I mean, in theory, I do still like it. But of course, it's all up to the earnings, right? So as much as we wanted to gain momentum and get back up above $1, if we fast forward roughly, 3-4 weeks from today, third week of February, we have earnings coming out. We're expecting a loss of 21 cents on revenue of a touch below 48 million. So if this company again comes out with a loss of 29 cents and they only did 31 million in revenue, yes, the stock is going to get decimated again. However, when we read the news back here, we were talking about potentially the next 1 to 2 quarters are really going to dictate, in my opinion, where this stock goes. So what I want to see personally, again, I do own, full disclosure, I do own a handful of shares of STEM. It is definitely not a large position. My cost basis was a little over $2 a share for the record. So again, they're not all winners, but I always told you guys, I'm transparent, I'm a man of my word, and I put my money where my mouth is. And even something like STEM, again, it's been dropping big for a lot of people, but I said I liked it back in the day. When I moved over a few dollars, I bought some shares of STEM personally for myself. So I got some skin in the game with you guys here. But we have to see how these earnings come out. And if these earnings, I'd say personally, if they're even in the ballpark, if they're kind of close, we may see a big reinvigoration come into STEM Inc. And the stock may start to climb back up. If the company says yeah, listen, we came close, it was a decent quarter, we missed the estimates, but now next quarter, we're back on track, we're going to start beating estimates, fulfilling orders, the revenue's going to start chunking in, we're about to turn the company around. So that's why I'm saying, in my eyes, over the next 1 to 2 quarters is really going to dictate where the stock is going to go over the longer term. But we technically have to wait for these earnings. And let me just see, out of curiosity, I can't look at it now, but I don't remember the last time we looked at STEM. What is this? Info systems. Why are we talking about this? The slight mention, really. There you go. 2 weeks ago, we got a new CEO. Okay. 5-year agreement, Neovolt. Managed solar portfolio in Hungary. What is this? Its software will be used to manage the commercial operation of a 484 megawatt solar portfolio owned by Neovolt in Hungary under a 5-year agreement. Well, that's good. I mean, because again, of course, we never get financials disclosed, but at least that, in my opinion, kind of solidifies a little bit of value here with STEM. The fact that everyone considered them down and out, and then they come out and have this 5-year agreement. So they may be here to stay. Again, the problem is we just don't know how much bad news can continue and where the bottom might be. Because as we mentioned, the biggest concern with a situation now like STEM is staying below that key $1 level, falling out of compliance with the exchange, and then having to enact a reverse stock split. STEM's PowerTrack web asset performance management tool will monitor, optimize, and control 8 utility scale sites in the country. Company shares popped 9% on that news. Technically is good news. And I feel like we haven't had any news of any new agreements or contracts with STEM in a while. So that could be viewed as even a bigger positive than we might realize. And that came out the 14th. Yeah, we spiked straight back up to this line almost. Look, the stock hit 91.99 cents. That trend line is in the low 91s, right? So we went about 0.8 of a cent above that trend line and then pulled back and rejected and started to drop back down below the moving average. And now we reclaim the moving average. So that's why, in my opinion, this is the trend line you have to keep an eye on. And if it stays and closes above this trend line, it realistically should continue to bounce and get back up here to about 94 cents and change and potentially break up and out going into these earnings. But you know, it's a difficult one to call just because, again, the earnings have been really rough. And the biggest worry is, I know we all want the short-term gains, but we could potentially climb up and break up, as we said, and gain some momentum going into the tail end of February with these earnings coming out. And then if the earnings come out light, again, we're going to see a big rejection. And then the stock can technically stay down even in the 50-60 cent range, going all the way out to 3 months would be the 3rd week of May. That would be like here. So again, we might get kind of a mixed quarter here, maybe with some positive guidance. And then I feel this next quarter is going to be a beat. That's just my opinion. Of course, again, in theory, I always liked the stock. It always seemed good. The growing backlog we kept mentioning. So, in my opinion, of course, I'm pulling for them and all of you. But, you know, we can only control the controllables. And this stock just needs to deliver. That's what it really comes down to. We need those earnings. We need that revenue to start coming in. Just like we used to say with Origin Materials. ORGN. Remember that one? The same thing, right? The company was talking about bigger and better things. Origin 2 project. No revenue was coming in. They kept missing the mark. They beat it all the way up to what? Like $1.70, wherever that one went. But then what started happening? Then all of a sudden revenue started to come in above estimates. 1 quarter, 2 quarter. All of a sudden the stock starts moving. Oh, we're back up to 130. We're back up to 160. Right? So that's why fundamentals are key. No matter what anyone tries to tell me, fundamentals are key. And if a company is consistently disappointing on earnings, then it, in theory, will consistently keep dropping down in value. But you can see, we spoke about the potential break to that other trend line here of about like the low 50 cent range. And you can see that's where the 50-day moving average is, sitting at about 53 cents. So it looks like it's trying to fight and hold and get back above this mid-Bollinger Band and maybe pop to this 200-day of 85 cents. But you have to keep an eye on those two trend lines we looked at because we could potentially break down to about half a dollar. MACD recently crossed to the downside. Again, we have earnings in about 3 weeks, so we may soon begin to curl and head back towards the upside and potentially cross back up going into earnings. RSI basically middle of the road here at 52. Switch over to the weekly real quick. RSI middle of the road, sitting a touch below 49. God, these ads are annoying. And you can see we spiked right back up to about $1 and change to that moving average, and then we rejected and came right back down. However, you can see, look at the top Bollinger Band, down and down and down, and now we curled, and it's technically slowly moving to the up and up. So that's why now even this bottom one can curl up and start to come and send the stock in an upward channel. You understand? But the MACD is still above. Looks like it tried to test and potentially break a few times, but it didn't. In my opinion, I think they beat the stock up enough. So that's why, it didn't cross and just tank down to like 8 cents. I do, again, I know it sounds crazy. I do still think there's value here. However, let the record show this is a significantly more speculative play than pretty much every other stock we looked at on this channel, right? We usually look at stocks that have decent revenue coming in. They're increasing guidance. They're doing buybacks. It looks undervalued in the numbers. STEM, again, a little bit of a different story. But, I just want everyone to understand the risks involved. And, we could potentially bounce back to 97 cents. That's why, again, we're looking here, this trend line 91, this trend line here at about 95. And that's why I'm saying if we stay above this support trend line, we can slowly inch up and then potentially break up and out going into earnings. And then we'll see what the report is. However, we did have big volume come in right at the end of the year and right after the bull dropped. So maybe some people know something, or they just feel that the reward is worth the risk. And they piled in and they took a position, at sub $1, low $1, and now they're going to tuck it away for the next 4 quarters, 8 quarters, and they're going to see how the company performs. But this technically, of course, is a decent sign with the volume coming in. And, they might be right. As I said, this might be a very close quarter, or they might surprise beat. And then next quarter, all of a sudden, we might get a beat. And then 3 months later in August, we might get a beat again, right? And we might completely flip the script and all of a sudden turn into a beating, growing company. But there is a lot of upside potential here just because of how much the stock was beaten up. But again, the company has to deliver. Let's check the pivot points real quick. I'll let you go. 184 to the upside. Stock hit like 169 and pulled back. Yeah, they didn't want to keep it above the 50-day moving average. But again, it might jump up and get there going into earnings. So we have to see how the next couple of weeks look. I'll probably do an update on STEM for everybody. Maybe we can do it like a week or so before earnings and check back in on how the stock looks. And then, of course, once we get the earnings, we'll do an update as well, and we'll look at the numbers together and see maybe if they kind of maybe beefed up guidance or they're giving us a positive outlook, right? Well, we'll see what happens. Here on the daily, looks like we have a pivot point, 59.5 cents, which the stock recently bounced off of actually a couple of times and is technically still holding and is above it. So this 200-day moving average, 84.7 cents, could potentially be the next stop. And you see the next resistance level at 88.8 cents. So we have a lot of action on the way up to the 80s. And again, that trend line where the gap fill was at about 91.1 cents. So that's why we could be heading back to the up and up. We really shouldn't drop back down here. But again, the company hasn't been delivering. So if it happens to break down before it breaks up, in my eyes, I really wouldn't be surprised. Because as much as traders like to talk about technicals, when you zoom out and you give a stock time, that is more based on fundamentals. But hey, again, I'm not bashing anyone out there. If you traders saw a situation here at 40, 50 cents, and then you took profits at 1.25. I mean, obviously that's a phenomenal return. So whatever's working for you, keep doing it. But in my opinion, that's basically how I feel about STEM. And those are a couple of the levels that I'm personally keeping an eye on. And as I said, if it happens to pop up or break down, then we can do another update before earnings, and then we can check them out the end of February and see how they actually reported. But that's pretty much it. I'll end it there. So once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, drop them down in the comments section. I'm usually pretty quick to reply. Thumbs up, algorithm, helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time, and have a good day.